Hey guys, welcome back to my channel. In today's video, we're going to be talking about tax benefits of owning your own home. And on top of the tax benefits that you get for just owning your home, if you're self-employed, there are even more tax advantages that you have. So in this video, I'm going to break down exactly what tax benefits are available to you. See, I think it's important in this day and age. A lot of young people, especially today, don't really understand what taxes are. And I made a video about this, talking about how schools aren't really properly educating people on their personal finances, especially taxes. So these are a lot of benefits that I think get overlooked or people don't know about that they can take advantage of. See, a lot of people don't know what tax benefits are available when they buy their first home. And a lot of my channel is focused on teaching you what you should be taught in school. I have a whole bunch of topics that I'm going to be covering every single week. I'll be releasing multiple videos covering these topics. So definitely subscribe if you're interested in personal finance or real estate investing. Okay, so let's move on. So this video will be talking about tax benefits primarily for your primary residence. I'm not going to be talking about the tax benefits of real estate investing. However, a lot of these benefits that I'll go through will also apply in that situation as well. There are a lot of benefits to owning your own home. One being it's one of the easiest ways for most people to start building wealth early on. Instead of sending your money to a landlord, you're putting your money into your own investment. But on top of the wealth building, the tax benefits that come along with home ownership are incredible. So let's get started and let's start talking about what those tax benefits are. And the first tax benefit, mortgage interest. So at this point, I'm assuming you have a mortgage on your house. And so any interest that you pay on the mortgage each year can be deducted on your taxes. This will reduce your adjusted gross income, meaning this will lower your tax liability by that amount. And this deduction is available for loans up to $750,000. So let's say you have a $500,000 mortgage on your property. And then let's assume you have $1,000 per month interest that you're paying. That would leave you $12,000 of interest that you'd pay for the year. And then let's say you have a $100,000 taxable income. So you would deduct that $12,000 from the $100,000, meaning your taxable income would then be $88,000. So you can see how that alone can save you a lot in taxes. The second tax benefit, you can write off real estate taxes. So the amount of tax that you pay every year to the city, you can write that off on your taxes as well. And then that will further lower your tax liability. How's that? You've already saved a bunch of money. Now let's continue to save even more money. And moving on to number 3, points paid on the mortgage. This one is a little bit more rare. Most people probably don't have points on your mortgage, but if you do, then you can take this as a deduction as well. And now the fourth tax benefit would be if you were to sell your primary residence. So this one would be for if you have owned your primary residence for at least 5 years and you have lived in it as your primary residence for at least 2 out of the last 5 years. You're allowed to sell the home and not pay any capital gains tax on this sale up to $500,000 in profit if you're married, or $250,000 in profit if you're single. This one can be great if you're relocating for a job or you're just relocating for any reason, then you don't have to worry about paying capital gains on this amount. Number 5 is the Home Office Deduction. This one is limited to people that are self-employed and run their business primarily out of your home office. Now this can be a home office, it can be a separate structure on the property like a garage that's been transformed into an office of some sort. Unfortunately, if you're employed and you work from home, this doesn't apply to you. However, if you have your own small business on the side of your full-time employment and you use this home office as your primary place of business, you can take this deduction for the profits on that side business. Now, the way you're able to use this, you take the square footage of your office and divide it by the total square footage of your residence. And that will give you a percentage that you're able to apply to all of the expenses for the entire property, such as the electricity bill, the gas bill, the water bill, the phone bill, the internet, all of these expenses that are throughout the entire home. You would take that percentage and apply that to the amount of each of the bills. So for example, if you had a 500 square foot office and your home was 2,000 square foot in total, that would be 25%. So 25% of each of the bills I just listed is what you can use as a deduction on your home office. And now there's a couple of ways you can take this deduction. There's a simplified deduction and an itemized deduction. So the simplified deduction is the easiest way to take it if you just have a small office and you don't have a lot of expenses to deduct. This is good for an office up to 300 square foot, and it can give you up to $1,500 in a deduction. However, if you have more expenses or your office is bigger than that, then you'd have to go with the itemized deduction and list out and calculate all of the bills and expenses that are for your home office. Like I said, you can use this deduction as a renter too. So you could deduct 25% of the total rent for the property. And then the other thing is you can fully deduct office equipment such as desks, tables, lamps, anything that's entirely used in your office for your business. Okay, so now that we just got through all of the home office deductions, let's move on to number 6. This is the residential renewable energy tax credit. You can get tax credits from either the federal government or also some states offer tax credits for different renewable energy sources such as solar, wind, geothermal for heating, a solar powered water heater, wind turbines, anything that might fall under renewable energy, you'd want to double check, and you may be able to take that as a tax credit on your taxes. And so those are the major 6 tax advantages you get when you own your own property. However, there is a caveat. You can only take these deductions if you itemize your deductions. And if you're not familiar with how your taxes work, there's either a standard deduction you can take or an itemized deduction. If you're married filing jointly, the standardized deduction is $24,800. So the only way it would make sense to itemize everything that I just went through would be if the deductions were greater than $24,800. Otherwise, you just take the standard deduction and you don't have to worry about keeping track of all of those other expenses. So for an example, let's say all of the deductions that I just went through now equaled $12,000. If you're taking the standardized deduction of $24,800, that means you'll get $12,800 more of a tax deduction by taking the standardized tax deduction. However, on the other hand, let's say you have $37,000 of itemized deduction. In this scenario, you would want to take the itemized deductions because you would be getting $12,200 more in a deduction than if you just took the standard deduction. And while this video isn't about real estate investing tax benefits, if you have a rental property, then you can take a bunch more deductions off of that. You can take depreciation of the property and many more write-offs to lower your tax bill. In many cases, you wouldn't have to pay any taxes on the rental income from the property, but that's something you'd have to check with your CPA for sure. So yeah, I hope this video helped you understand what tax advantages there are when you own your own home.